Hello and welcome to the Kay and Burton Report, coming to you from Red Court, which is undoubtedly one of the most stunning period homes in Melbourne. And later in the show, the man behind this amazing restoration, Adam Garrison, will take us on a personal tour. And now to the market report, and it's been a big month here at Kay and Burton. In fact, Chairman Gerald Delany rates this as the strongest market he has ever seen in his career. There have been several off-market properties in Boroondara selling for more than $10 million. South Yarra, Toorak and Bayside also continue to perform well, with clearance rates up around 80%. All of this comes despite the low Aussie dollar and indications that Australian business confidence is waning. To explain the current financial climate, I spoke to the National Australia Bank's Executive General Manager of Global Institutional Banking, Spiro Pappas. And for the finger on the pulse of Melbourne's property market, Kay and Burton Managing Director, Savas. The horizon is a little hazy for many industries in Australia at the moment. The National Australia Bank's monthly business survey showing confidence is at its lowest level since before the 2013 election.
There's a sort of a continuing weak trend around confidence. Its confidence has been down since pretty much October last year. The good news is it's not negative. It's sort of operating at around zero. The long run average, however, is up at around plus 7%.
Weak commodity prices have affected mining industries. The low Australian dollar is putting pressure on wholesalers, while confidence in retail is patchy.
The overall picture for the economy is that GDP will grow at roughly 2.5% to 3%, which is pretty much the long-term average.
Despite this, construction, especially residential developments, remains strong. And as for property, in particular the sector of the market Kay and Burton specialises in, well, it's as hot as ever.
It is. It's a very exciting market. In fact, it's the strongest market I've seen in my career. I even say that it surpasses the 80s, which was a very halcyon period of real estate.
Managing Director Savas agrees.
The market is strong, there's no doubt, especially our sector. And from our private client base around the world, there is massive investment. The demand will be strong, will continue to be strong. The dollar's low, interest rates are low, and people are wanting to live in Melbourne. They want a part of Melbourne. They want to experience the lifestyle here and educate their children and have a happy life.
It's hard to tell just how long these super buoyant conditions will continue. According to the NAB, the current growth is not sustainable.
What we expect to happen, however, is for that to sort of start to, the pace of growth to decline. So in Sydney, we don't believe the double-digit growth that we've had over the last year is sustainable, and it's probably not healthy. Melbourne, we actually see there's a risk of it sort of falling into weak single-digit growth because of supply issues, etc. But overall, the picture is still positive for property, particularly in Sydney and Melbourne.